Thank you, ma'am. Senator Hagerty, you were next.
Thank you, Mr. Chairman. In March of 2023, we saw 3 of the 4 largest bank failures in history take place. And when panic struck, business depositors began to flee mid-sized banks and community banks. I had these depositors calling me on the phone. What do we do? I hear about the hard work that you're talking, Scooter. There was a lot of work that went in place. You ask yourselves why. Why is that? And I think Mr. Harrison got it. The biggest banks enjoy an implicit government backstop that the smaller banks simply don't have. This uneven playing field siphons deposits away from the local and regional banks. These are the banks that fuel the small businesses and local businesses in our economy. It's critical in Tennessee. It's critical across the entirety of the United States. Legislative action, I believe, is essential. Nobody wants to see the American banking system devolve into a system like Canada's, where only a handful of megabanks control over 90% of the assets. We need a system that preserves a central role for community and mid-sized banks that underlies the financial system of the future here in America. So, Scooter, I am going to come to you, but I have a very quick question for you, Mr. Harrison, because I want to get at the urgency of this. Why is it vital to address this issue now rather than wait till the next crisis?
Senator, thank you for the question. Thank you for your leadership on this topic. It's essential now because we're not in a crisis, because we don't have to respond to something that is knocking on our door. We never seem to predict when the next one's coming, so if we don't do it now, we really are uncovered because we don't have any emergency authority, the FDIC, and our businesses on Main Street don't have coverage for their operating accounts.
Thank you. I share your concerns, of course, and that's why with my colleague, Senator Also Brooks, I proposed a solution, and that's a targeted expansion of deposit insurance for these non-interest-bearing transaction accounts that we're talking about. These are accounts that businesses use to cover payroll, cover rent, pay their suppliers, and basically handle a variety of other day-to-day expenses. These are precisely the funds that fled in 2023, and protecting them strengthens the confidence in the community and the mid-sized banks. That, in turn, will strengthen Main Street, and it'll strengthen our economy overall. I originally filed this proposal as an amendment to the NDA alongside Senator Also Brooks, and we're going to file soon a standalone legislation in an updated fashion to get at this. So, Mr. Pontiatley, Scooter, I'm coming back to you now because I think you can help us get at this. There seems to be a concern that in doing this expansion, somehow we're going to raise the assessments on the very banks that we're trying to help. I want to help get at this. So I've got a few questions to ask you.
Absolutely.
First, does merely shifting the existing deposits from the uninsured column to the insured column cause an ipso facto increase in the bank's total liabilities?
No, not necessarily. It's risk-based, and so it would depend on a number of factors based on the current assessment formula.
I think the answer of no is sufficient on that one. Insurance coverage expansion doesn't mechanically raise premiums for banks. To be clear, increased assessments are statutorily triggered when the deposit insurance fund's reserve ratio drops below its mandated minimum. So my next question, is the DIF currently overfunded beyond its statutory minimum?
I think that is a question of characterization. I don't know that it is overfunded or underfunded, but I would say this, that the DIF, if you add new risk to the system, namely institutions that could load up on these types of deposits that are now insured, yes, that could raise a question to the DIF from a characterization.
To be cleared from my colleagues, the DIF is currently overfunded, just to be clear with that. The reserve ratio is adequate. It's exceeded its required mandatory level, and it's actually trending upward. And this is why, in addition to a 10-year transition plan that we've got for this, it's precisely why my proposal is able to expand coverage without imposing any new assessments on the system. So I'd just like to close with this, my colleagues, to understand that this targeted deposit coverage expansion is going to do something to shore up confidence in mid-sized banks and community banks, and it's going to protect Main Street businesses. A stronger, more diversified banking system benefits every American, and I look forward to introducing standalone legislation, again, alongside Senator Also Brooks, in this particular issue, and I think it's going to serve America well, it's going to serve our banking community well, and I urge my colleagues to support this. Thank you.